Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up for this Friday, the 22nd of May, 2020. Now, in the weekend, we're going to look primarily at week charts. We're not going to go to the daily charts. I do those Monday through Thursday. Here we start off with like one monthly chart, and then I just move right on through to the weeklies. Interesting day in that there was a lot of evening up today as we're going into a 3-day holiday. Happy Memorial Day to all. Remember, the markets will have abbreviated trading sessions in some commodities. My clients have all received from me. I sent out the hours that the markets are open Sunday night, early Monday morning, and then how they resume trading in Monday afternoon going right into Tuesday. So it's typical. This is what the holiday schedules are. Energy prices down a bit on the day. Grain still ugly. The U.S. and China still a war of words. China's pushing the envelope as much as they can on Hong Kong. So I'd be watching what that is doing as well. I think that's going to get very interesting because they're trying to take more control of Hong Kong at this point in time. I just wouldn't do a darn thing with that. When I take a look at what the gold did and the silver, they've been stellar performers, as well as the platinum market for the week. So very good action there. So let's take a look, if we could, at the E-mini S&P 500. The market's gone from 32.31 down to 25.69, and for the first time, and this is a weekly chart, so this is the first time since the week ending March 31st that the market has been able to get up and close over the 18-week average. That puts the bias of the market on a monthly chart back to the upside. Why? I view the line in the sand on this chart as the 18-month moving average of closes. In fact, if it's a weekly chart or a daily chart, whatever that 18 average is of closes, if you're over it, you have upside bias, under it, negative. That triggers other of the indicators. So indicators can filter other indicators. That's my concept. When I look at the overall bounce on a weekly chart from the huge 3,400 area down to this 2524, we've had a 50% correction, and on a closing basis, and that's all this is, not the highs and lows, it's the first close over those numbers. Now, when we go to a weekly bar chart, you've made a 62% correction. Get up next week, I'm going to throw off the Fibonacci numbers. They're not working. And that would remind me that where are we? Well, gee, it almost feels like 2009 when the market came up and we were still wondering, was this a bounce in a bear market? And it was the beginning of an 11-year bull market. I'm not saying we're at that point, but it would remind me that the market just seems to overcome everything, and the Fed has the markets back, the Treasury has the markets back, and if the COVID turns out to get a cure, a treatment, you'll see more economic areas of strength. When we look at the swing line, we have a pattern of higher lows, higher highs. That's bullish. What would break the pattern is taking out that 2771 level. We closed over the 18-week moving average of closes, so we have the trend up via the swing line, the bias up, and we have, if you look at Bollinger Bands, they're very far away. There's no resistance from them in sight, and we have momentum still pointing to the upside. So, on breaks, I will be looking to see, is the market going to find support between 29.25, let's call it, and 28.90, the 100 and the 18-week moving average of closes. Going home, bulls control this market, and it is bullish. NASDAQ, needless to say, has been bullish all the way through here, and it's the FANG stocks. I mean, they are the top performers in the NASDAQ. Technology is what ruled the day during this whole COVID-19. As people go back, I don't know what tech will do. Are you going to cut your cord to Netflix and some of the other things you bought? Just don't know. We'll find out. How many people are going to work from home going forward? Not sure. But certainly what happened is people have found they can order from Amazon. Everything comes in, the groceries. There's a way to work with this. And if there were reservations about it, it's changed. So you're looking at higher lows, higher highs, very bullish still. In the Dow, still bullish. Or is it? Not really. This is a rally in an overall market that, unlike the S&P or the NASDAQ, has still not been able to get up to and close over that 18-week average. So on the first challenge of it, I'd look for the pros that have been goosing this market higher to probably a 24,923 to 25,000 level to probably dump some of those positions. Wouldn't surprise me at all. Russell, the same thing. You've worked very hard to get all the way up here, and now you're getting to that 1363.5 zone. That should be a resistance point. In the VIX, as the stocks have been coming back all this time, the VIX continues to fall. The trend is down, the bias is down, the momentum is down. Everything is still bearish on this. No sign that it's ended yet. In Treasury instruments, yields keep falling. It's that simple. They're stable right now, but yields are still, and you can see this, higher lows, higher highs, they're still slipping away on you. The dollar index stepped out of this uptrend and has just drifted, and finally it's been getting back to that 18-week moving average of closes. The swing line is down with lower highs, lower lows, but the settlement stays over that average. If it closes under 99.22, then I think the bears take control of the market, and I'll look for even lower numbers out of this. In the eurocurrency, it's the flip-flop. The market's been trying to climb, and it's failed now twice, just like the dollar failed at the 18. It's failing at the 18. They're just flip-flops of each other. The Canadian, momentum sort of flat. You've got the swing line with higher lows, higher highs, but the bias down. So on this particular chart, no real trend. In the Japanese yen, you've stepped out of your trend. The break this week, prior to this, you had higher lows, higher highs. Now with this week, you took out this low, and that breaks the market down. So as far as I'm concerned, this market's now run into a buzzsaw. You know, one of the things I try to do for my subscribers, and that's what this is about, these videos you watch at the end of the day are the lead-in to my subscriber videos. And if you like these, my prayer is that you like the other ones even more, because I'm able to say, I want you to buy here. I want you to sell there. I want you to put your stop here. I want you to take your profit there. Do this, do that. I also, when I put them out, ideally in the morning subscriber video, I'm giving you all the news that I've seen in Asia and Europe at that point. And I'm recording at 5:40 a.m. Central Time to get your day going. I'm going to cover the full spectrum of the commodity market. So I'm not only giving you the specifics, the fundamentals, I'm going to start bringing you in with the charts. And they'll look this way with more studies than you get at these end of the day videos. And I cover all these markets. There'll be a slide bar if you go to our website for this one, and as you slide around, it brings up each one of those sections for you, so you don't have to watch everything. Each video is about 20 minutes long. You sign up for this by going to our website at www.iraepstein.com under the word research. That's where our Spider ETF video is too. You click up here to get there just as well. I'm Ira Epstein. You have a great day. I will see you all come Tuesday. Have a great Memorial weekend.